The Nasdaq 100 rebounded on Monday, filling its gap overnight on Sunday before rebounding again. Not all major indices have filled their gaps, but the Nasdaq 100 has. The rally was driven by tensions in the Middle East cooling after Iran said it will not escalate the conflict with Israel. This is evident in precious metals, which gapped down overnight. Gold is down big, with the gap remaining unfilled. Tuesday saw further dip buying, with geopolitical tensions easing and US manufacturing data hitting a 4-month low, which helps stocks rally as it increases odds of rate cuts. Bad data is good for the stock market at this moment in time. Price held firm against the 20-day moving average on Wednesday as the Nasdaq 100 fell with yields rising. A big mover was Nvidia, which went from green in pre-market to red when markets reopened and brought the market down with it. Nvidia initially was up 2% pre-market, boosted by CEO Elon Musk's comments that Tesla may install 85,000 Nvidia chips to train its AI models by end of year. Tesla itself outperformed despite missing on earnings. Two reasons for this. One, the stock is the worst performing stock in the S&P 500, so it's a case of locking in profits for short sellers, causing a squeeze. And more importantly, investors want to know what's next for Tesla, what's in the pipeline. Excite us, Elon Musk, and he surely did, by announcing that Tesla is looking to launch new, more affordable EVs sooner than expected, which boosted the stock. Thursday saw price fall sharply again after holding the 20-day, after US Q1 GDP came in much lower than expected, whilst inflation pressures persisted with consumer prices rising. Markets have effectively ruled out any rate cuts before December, which is in stark contrast to a few months ago when multiple rate cuts were priced in. This is what fueled the most recent rally, and we're seeing a correction in price as a result. Meta shares fell sharply after reporting earnings that beat on Wednesday night, as forward guidance came in lighter than expected. Additionally, Meta expects costs to rise as it continues to invest heavily in AI. This is likely to be a trend amongst the mega-cap tech companies, as they'll need to spend a lot of cash before seeing the rewards of their investments in AI. In the short to medium term, this is a negative for tech companies like Meta, which is why the stock tumbled. Today we're seeing price edge higher, above the 20-day moving average for the first time this week. Whilst the Fed's preferred inflation measure, PCE, came in slightly less than expected, it was earnings from tech heavyweights Alphabet and Microsoft that has kept price pushing higher. Both companies beat on earnings, whilst Alphabet pushed higher by double digits after the company authorized its first ever dividend and a 70 billion share buyback. In terms of levels to watch into the close of next week, with price breaching the 20-day moving average today, 17,815 will be the upside level to watch. If we get better than expected earnings next week, there is strong possibility price backtests the breakout from last week, being this trend line in black. This sits around 18,140, which can be seen more clearly from the weekly chart. On the downside, 17,648, 17,504, and 17,060 are the levels to watch. Next week, earnings continue with Amazon, Alphabet, and chipmaker AMD. In addition to that, we have EU Q1 GDP, US ISM services and manufacturing PMIs, as well as the monthly jobs report. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.